Back on Morning Mover, shares of Netflix are higher in the pre-market after MoffettNathanson upgraded the stock to a buy from neutral and raised its price target to $1,100 from $850. The firm believes Netflix's ability to monetize its engagement remains underappreciated and now has increasing confidence in its margin expansion potential. Netflix was up 3% last week. It's up 50% over the last 52 weeks. But that time now for Options Corner. Joining us to take a deeper look at Netflix, we've got the Duke of Data, Rick Ducat, lead market technician here on Schwab Network. All right, Rick, talk to us about the trends that you are seeing when it comes to the chart for Netflix.
Yes, we got some nice upside activity. It seems like pointing toward this morning's open here in the pre-market. But when we look closer, though, it doesn't seem like it'll be quite enough yet at this time to take us above a key area here. This is a resistance point here. It represents the low point that we saw after our old gap up. And then it's also our yellow 21-day and orange 63-day EMA coming together roughly in that same area between about 940 to 950 or so. So quite a bit to work through in this area, in addition to our trend line as well there. But we can see, though, that last week RSI did make a breakout above this downward sloping trend line here, and we also saw quite heavy volume. So an interesting setup to start this week, Diane.
All right, and then, Rick, what about any notable options activity? What kind have you seen in Netflix recently?
Options market not quite as active as you might think for such a big name here, but we can see that the top open interest areas on the call side, 1,000, 1,100, 1,140. On the put side, a bit more widely dispersed, 900, 500, and 480. But we can see, though, that there was also one interesting options trade, an opening trade, December 19th, 1,200 strike calls, selling to open, break even 35% to the upside here. Neutral to bearish trade if it was standing alone, coming in at about a $612,000 credit.
All right, that's Rick Ducat, lead market technician. Next time, Rick, really deep dive into the charts for Netflix and some recent activity, options activity there. Time now to take us through an example trade. For that, I want to bring in Tom White, senior options contributor and co-host of Fast Market. All right, Tom, so how would you structure an example trade in the context of this upgrade from MoffettNathanson?
Well, Diane, I think one of the key things is you've got to realize that while Netflix's metrics and data has been pretty good over their past couple of earnings events, it's not immune from a pullback in the overall market. If the stock opened up here around $930, it's still off about 12% from those all-time highs we saw just a couple months ago. So you got to keep that into context when looking at creating positions, especially using the options here. Implied volatility levels really elevated on this pullback that we've seen in Netflix. It's at the IV percentile ranks at about 75%. So we're in the top 1/4 of what we've seen as far as implied volatility levels over the past 52 weeks. So keep that in mind. And this strategy takes advantage of that higher implied volatility. If you're bullish on this stock, this is a strategy that'll take advantage of it while giving yourself a little bit of cushion to the downside here. So I looked at a short put vertical here out in the April 11th option series. So we've got a few weeks to expiration, but why'd I pick the April 11th instead of maybe that monthly option series on April 17th? Well, they report earnings on the 17th. So I'm avoiding that earnings event, but still taking that neutral to bullish stance. Selling a $25 wide short put vertical that's neutral to bullish, sell the 900 strike puts in the April 11th option series, and then buying the 875 strike put because I want to stay risk defined on these positions. If I collect a credit of about $8, if the stock opens up about $930, you can probably collect a credit of about $8 on that. That's what you can make, about $800 per spread. It takes your break even down to $892 to the downside. That's over 4% below the current share price if the stock opens up at $930. Now, we talk about positions and option strategies and probabilities in them. This type of strategy gives you a higher probability of success. Because you've got that 4% cushion to the downside on here. The break even, about 65% probability that break even will be out of the money at expiration, which is what you want. On these type of strategies, The idea is you sell a put vertical that's below the current share price with the expectations that it goes out worthless at expiration over the next couple weeks into that April 11th option expiration. So this might be the strategy that you look at because the stock's not immune to pullbacks in the overall equity market, but it's still a bullish type strategy with higher probabilities.
So given that the max loss, as you say, is 1,700, how do you adjust if it starts moving against you?
Well, the key thing is on short put verticals like this, time decay or theta is in your favor. So this it actually decreases the price of this type of position on a daily basis until you get to expiration. It's also short a little bit of implied volatility also. So if we see volatility come in, as you get closer to expiration, this will contract in value, which is what you want. So if it starts to maybe get down towards 900, you can always close it early if the market's open. But then also you can roll this to another option series. You can adjust strikes if you want. But if you start getting nervous, you're still risk-defying, though. You know exactly what your downside is.
All right, that's an example trade for Netflix, plus how to adjust if it starts moving against you. Netflix shares higher right now in the pre-market. Thanks a ton for that, Tom.